Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So, second day that the futures were down like 12 to 14 handles, but if you didn't come in short, you probably didn't make much money because we opened down, and if you would have pressed, chances are, we closed above where we opened, so you had to be a surgeon to make money. So what does that mean? It means it's hard. It means the trading is kind of tough. So there have been spots to get short and spots to maybe be lighter. And at this point, with the oscillator minus 50, which historically minus 40 is oversold. So minus 50 is more than the historically oversold spot. But this year we saw minus 95-ish in the extremes, which were not in the extremes. The VIX is like not even 17. So you would think that you have to cover a little bit, around here to let it burn it off. But it doesn't have to. So let's just get right to the charts. You look here, and you'll see, we have the SPX where, we like to show you the patterns that repeat themselves. This double bottom right here, your commitment to the double bottom right here, the taking out of resistance right there, and then boom, all the way up to finally breaking this ascending channel right there. So if you're looking to get out of the way of what could be a retracement, here was your spot. We talked about this spot when it got, broke below right around 2080, went down to 2052, retested it, closing the highs, which gave you that sneaky down move, and now you have another one. So the question is, you have some support going sideways, which is about the 50-day. So now, what could happen here, is, like I went over that time with the Qs, you could be seeing the beginning of a head and shoulders top pattern. The left shoulder, the head, this would wind up being like the neckline, and now maybe, it tries to bounce back a little bit, but doesn't have to create somewhat of a right shoulder, because at minus 50, it's hard for things to just fall apart. But we've seen crazier things with the computers. So at this point, what do we have here? We have 2045. You have the 50-day below it, closer to like this 2000. What is this? 2038-ish, and then the 200-day right here, and that's it's going to be a blend of the EMA and the SMA. So if you see some kind of crappy bounce like we saw on Monday, that's what I'm kind of playing for. I went home along a little spiders, went home long a little XLE, just because I figured we broke above the 200-day. It's coming back to the 200-day. Oil was lower and then kind of bounced, so I figured maybe try something here. I talked about this spot being a spot to cover your short if you shorted it when it broke this ascending channel here, and now we'll see if this area holds. If not, this is your next spot underneath it. This is that Doho spot, if you remember. Qs, just to give you a little forward looking, if you remember when we talked about the Qs breaking the ascending channel here, that was your out, and then somewhere in here we were talking about whether or not a head and shoulders pattern could build, with that being the right shoulder, this being the left shoulder, this being the head, here being a neckline, and that kind of came into fruition. And now some people are saying there's a bigger one here, where here's your left shoulder, this whole thing is your head, and now maybe it tries to bounce up a little bit to create a right shoulder before seeing more downside. At this point, I don't know. All I know is that there have been things to be long, things to be short, and it's hard to sink your teeth into anything right here. I feel like if you're going home slightly short, if we open up 10 handles, you probably could short a little bit more and get bailed out. If you go home slightly long like I'm doing, we open down 10 handles somewhere into that 2035 to 2040 area, then the oscillator would be like minus 65-ish. We probably get a gap fill. You just have to be patient. So, or you can be flat and figure out which way you want to go depending on the morning. In the positive side, Facebook still looks good. Facebook is holding the two prior highs, holding the gap. Maybe if the market gets a little bit of a bounce, it could see a move above this to get back towards the earnings high. So this, to me, looks best. It's letting the 8-day catch up. I am long small Facebook. Amazon was a little wishy-washy today, but overall, it's still is holding its earnings gap here, and opened red, went green. We talked about that potential trade. Putting in some time here. Maybe at some point it can get back above that if the market gets any better. This is one of the things that's closest to the highs. Some guy, I didn't know who it was, I saw an article quickly saying he thinks Amazon is a 10-bagger in the next few years, with all the businesses it has going on, which I kind of agree out of anything, and they'll probably announce some kind of split. You saw a small bounce in my morning note. I talked about Google and the autonomous car that was trading $5 up yesterday after hours. That with it down $4 or $5, maybe you can go from red to green if you trade Google, and that did happen. I didn't touch it. Still trying to hold this support, trying to hold the 200-day. Really not that compelling. We'll see what happens here if it could trade above this lower area and retrace higher, or is this a bear flag for lower prices? That won't be good for the overall market. Apple, so far, Timmy Cook, one-day wonder. This stock is very broken, and we've talked about it being broken, and this is last year when you had your way out, when it broke all the moving averages. This was, earlier before earnings when we lost a 200-day and lost this upper level, and now here you are hovering near big-time support. So yesterday we were pretty much all along trying to play that bounce into the mad money scenario, and then I didn't take it home because, thanks to Jim, I'll give you a shout out, talked about the patent thing in China, whatever, and all I know is you had a quick window where it pushed up, went above this 95.74, put a high in at 95.90 and came below, and some guys in the office got shorted. They're like, you know what, not really much of a bounce considering that Tim Cook had to go on Jim Cramer's show to talk highly about his stock that's been pummeled, and there were two sides of that story. So anyway, closed back down. To me, macro-wise, it still looks pretty darn vulnerable. If you look at Head and Shoulders top patterns, this almost could be a textbook one where here's a major neckline. This was last year's support at 92. This was prior support at 92.50. And now you have a major hole in the stock right here that is unfilled. It shows you downside power. So if it were to get below this, probably not good for the market. Or tech. I don't care. It's one of the most widely owned stocks in the world, or America at least. And it could see a move down to here if it breaks below that. So we'll see what happens there with Apple. Oil itself had a little bit of a pull-in, but didn't fall apart. I was shorting it after the inventories number. I was like, that's a too big build versus what it should have been, and wound up not really coming in that much. So I guess we'll use this tomorrow to figure out what you want to do with oil. On Monday we talked about selling the GLDs, and if you sold the GLDs, I missed the buyback. We talked about 121.60. Well, it went pretty much to the 8th day to the penny. So either you had a good spot to cover, or maybe you got long. But we'll see if it wants to continue. I did not buy back the 124s I sold to make the call spread. I was not at my desk, so I still have the call spread on, and I also didn't buy back the GLDs. So if you guys did, you caught a good trade, and we'll see what happens tomorrow. Also, I think some guys were talking about, getting back into the miners. What a move for those of you who got short on Monday, the NUGT, when you had this, open up failure. They call it the gapping crap. And look at this move into the 21-day. I think the best setup would be a little bit of a down open tomorrow and get a red dog reversal around this pivot here, which is 86.20, where maybe it pushes below, gives you a cleaner entry versus having to take it overnight. But I think some of you guys took it overnight and said if it opens lower, you'll just buy more. Okay, then you can handle that kind of thing. This is your next level down here near 80. But 8-day broke, and here's a 21-day. It's been above the 21-day ever since it broke above this wedge pattern. So interesting around here, at least a cover versus not. Talked a little bit about maybe why I bought the puts in the yen, but not too much here. Holding the gap. I was hoping that maybe within a few sessions we get at least to here. We'll see what happens when the Nikkei opens up, I believe tomorrow. And that's it. Tesla's out after the close. It went up $10 to flat. I don't know exactly what it's doing right now. It seemed like numbers were fine, but who knows if it's enough to to basically warrant the valuation. They haven't talked about the orders yet. This is the recent low. The low is 220. I saw it get up as high as this 440, which was some resistance right here where it broke down from. They were pricing in a $20 move via option, so typically it's good to know where $20 is. Since the options guy have a lot of control, we'll see. And this is a kind of weird spot where those of you that got short because no stocks are making new highs and tech sector was weak and blah blah blah, 2100, congratulations, you could have shorted the break at 2080, shorted the retest back on when it closed in the highs. But right here around 2046 to 2050, you have to really have a big thesis that you want to stay short with an oscillator down -50. So we'll see what happens tomorrow. It's Thursday, jobs report Friday. Trump, who would have thunk it? You know, it's like the analysts out there. Every analyst always puts a strong buy when something's near a top. Well, no one thought Trump could pull it off, and he did. And to be honest, you know, just like the market, you got to trade what's in front of you. Well, now we have Hillary Clinton and Donald Trump in front of us. And, you know, I don't talk politics, but if I gun to head had to vote for someone, it would be Trump and not Hillary. Sorry. Have a great night. See you tomorrow.